How's how's it going, everyone? For this week, I wanted to share with you a step-by-step guide, and I want you to excuse me about my voice, but is I work a lot on different um, projects with my voice, and I'm very sore. My throat is very sore, so I will go ahead and just guide you with this. Okay. I want to talk to you about Apple and how you pinpoint everything that we work on as far as statistical disruptive flow, what it is and how it happens. So the trade alert number 13 back on June 14 had a couple of view on what was happening. The first idea that you want to grasp is how everyone at the time was just considering how American tech was actually doomed, how American tech was just overextended. There's no reason not to think that that might be the case if you're just looking at the view from how between 2008 2009 Amazon went from $50 to $3,500 in the next 12 years. From that perspective, yes, American tech, which includes Facebook, Netflix, you can even call Microsoft and Apple, of course, they were overextended. But back in June, there were a different set of ideas that you have to put in mind to understand where is American tech and where is heading. I don't think you can be in a position where you're going to make 500% just buying shares. But if you pay attention to the little disruptions that happen in the US options market, then you do have opportunities. So the macro theme from coming from professionals like Tom Lee from FundStart, Strat, just give you a little bit of the macro. But when you look at the opportunities, everything was there. And we had a little bit of disruption on this particular contract. It was at the time, if you take a look, it was June 14, but then there were a little bit of disruption. This is just a little bit of guidance. For example, the open interest on that particular contract was only 10, and then out of the blue, you have 117. There's this misconception that you have to look for big amount of money dropped into the particular contract for you to make money. That is not true. With as little as this, you have what can be the beginning of a series of disruption in the options market that will lead you to think that someone is building up. So clearly, someone was building an opportunity in this play. So this is July 30, the 131 contract. At the time, Apple was trading at $127. That's just to give you an idea. And that's June 14. The reason why I'm sharing this with you, because just paying attention to this basic mathematics, just simple arithmetic, then you can look to opportunities that on less than 15 days, by June 28, we were actually trading at 100%. So that gives you how you don't have to be a genius when it comes to options, different strategies like an iron condor, butterfly, and all the different plays, verticals. You only have to pay attention to the little disruptions, and this can be very subtle. Like if you multiply 279 at the time times 117 in volume for that particular day, that was not a lot. Okay, so that's one thing. Simple math can guide you to spot little but very subtle SDFs, statistical disruptive flows, that will guide you to, at least conservative speaking, you're looking to double your money. That's one thing, okay? Now, the other more stuff that you have to pay attention, which is the big disruptions that they start building up. For example, at the time, I knew by July there was some money and it was increased in the flow, but about 500%. And someone dropped $63,000. I knew that happened way on May 20. So what I do is that I collect a series of little disruptions, and I have a journal of those ideas. Also, remember the trade was placed on June 14, but I knew they were on the 131 call, June 25, there was a huge disruption, about 1,548%. Someone dropped $1.8 million. And that was allocated in the first week of June, to be more specific, June 1st. And then the other idea is that someone was playing Apple, or actually still playing Apple, with a lot of safety. And what I'm about to do is to share with you how the big players they allocate those SDFs. Think about that this one was placed on the last week of May of this year around 4:20 p.m. and he allocated 5.7. Let me repeat that figure. $5.7 million. So I've been tracking the behavior and how the money has been allocated in the options market for Apple. So I knew this all the way from May 24. So when I issue my narrative is not about what I think about a particular company. And yes, it's not going to be perfect all the time. But as I keep making sure we tune up and perfect how we pinpoint these entries, it allows us to go to very good returns, because by not too far, by July 30, by July 23, that means 23 days in July, only 7 days from the expiration, that same contract that was trading at 279, yes, right there, it was trading by July 23 at $17.55. So let's just take the calculator just to give an idea. $17.55, he was selling for $17.60. That was the bid, $17.60 on July 23rd. Divide that, let's say you get filled, and worst case, you pay $3 per contract. That gives you a 586% return. 586% return. Again, it was issued on June 14. If I look at let me take a look at the chart and the daily. So let's say you actually go in on June 22, June 14. You see, if you actually trade the same call June 15 or June 16, you don't have much changed in the price. So you still had a lot of time. So either you were paying $2.50 or you were paying $3 per premium, and that will take you to this particular return in less than 45 days. Actually, to be more exact, it will be probably within a month and a week. That's not a lot of time for you to take home such a huge return. At the same time, when I'm working with our community and members, I'm looking to provide the guidance necessary. Sometimes 100% doubling your money, it's enough for some. One of the things I'm looking to improve for myself, not for the members, is to be more conservative, which usually I look to go for grand slams. So that actually sometimes let our community members make more money than I actually look to make when I look at the portfolio itself. All right. So that's something I'm working to improve. Additionally, there's more to see, and something that I wanted to share also, something that you have to consider when you look at buying technology. Look for the spread between the US 100 and the US 500. This is the NASDAQ against the S&P 500, and that gives you a nice idea where the market is going before I continue with everything. So let me help you with that. So that's US 100, and I think we can do that, the US 500. Let me see if I can get it from this particular one. Yeah. So we go here and take stocks, futures, forex, CFDs. Wish I can have it. Let me just remove this one. See again if I can have it here. A month. Huh. This is a nice index that I was using at the time, but I'm not sure if I can pull that data now. Okay. So you can have it. If not, I will have to look it again. Hmm. It's probably not here. But I'll try to find it again because the spread itself gives you, and it's what I used for this particular case. Probably they're not offering again, but it's a spread between the Nasdaq and the S&P 500, which gives you an idea if you find a support, which we're doing at the time. It's a perfect time for you to buy American tech. So that's one that you have to keep in mind. But also, if that's the case, you can always use the Qs to give you an idea. If you go back to June, just take a look at daily. Um, you go back to May, this is June. You can see how beautiful it was coming to finding support at this level. And from that point, it just rallied. Absolutely. It was a massive rally at the time. 8.44%. This is following the Qs. And what that tells you is that the NASDAQ was about to rally. Then it paused, went sideways, and then it strikes again from August to the beginning of September before this retracement. So what you're looking to do at the same time is to join your longs in American tech when you have these pullbacks, which means at this time, when you have this massive pullback, this is probably the place as we find this balance between this liquidity back on August 19 and the present. This is the perfect time for you to load again your calls. That's if that's the case if you don't really have a clue what is happening behind curtains with the SDFs for this particular stock. So that's another piece of evidence that was leading me to be, to position myself in a long. And finally, there was a little bit of a pattern behavior that I had. But the final thing is I want to share with you is the trend Fibonacci. So we can have all the math, we can have all the information on the dark pool. But one thing I like to do all the time is just to look at confluence between either the 20 exponential moving average or the 200 exponential moving average. That can be done on the weekly and the daily. But then you look at the values, and at the time, if you look at what was happening in the price of the stock, it's too small. Let me see if I can zoom it. You can see that we were bouncing from the 38.2%, and then we were climbing, creating a higher low. You can see that, a higher low, and that is the beginning of a bullish trend. The next step, the price slowed down at the 29.50%, and that was the beginning of finding strong support and heading into what can be considered a massive rally for Apple. Now, the reason why I'm recording the video is just to give you step by step of all the different pieces of the puzzle. The one thing I want everyone to look at is how all these patterns they tend to repeat. If I look at Apple on the daily and then I were to just drop the 200 exponential moving average, I do know that there's always a probability that I can still buy Apple at 134. If I look at what it's doing the weekly, it's very far. If I look at the 4 hour, then the story is a little bit different because now I know there's support. When I do basic pattern that you may agree or disagree, what I'm looking is within the bullish trend, what is happening every time we are close to a technical level. So last time back in November, as you can see, we bounced very strong bounce and we have a 33% increase. That's 36 points. Then we have a couple moments where you can buy the price under the exponential moving average. The same story, 19 points. Let's call it 20 points. And now last time, three opportunities for you to buy the price trading under the 200 exponential moving average. And once it gather enough energy, then it goes all the way to the top, 26 points. And the final push is 27%, 34 points. So the question you have to ask yourself, with everything that is happening right now in China, the lack of organization, the lack of determination, even if you were to invest in China, you probably wouldn't have the confidence to do that. So from this push, I'm looking to be a buyer. This is a pullback within a strong bullish trend, bullish activity. And I'm looking for the next bullish leg that will be 34, probably 40 points. That will be an extra 24%, and that will set me at 177. So that will be my target between now and the first the first 3 months in 2022. Now, do I know if there are SDF planes? Of course, they are. But with everything that I'm sharing with you right now, you have plenty evidence to position yourself into Apple and play either in the money calls or out of the money opportunities. The last part of this video, what I want to share is this. If I look at this in the long term, very long term, more weekly, and I look to study the push from May to this area, I take a trend Fibonacci, and what I came up with, again, we have a strong bounce so far from the 38.2% Fibonacci. What I want to do now is this. I want to measure the area, the value area, that's 36 points, and then I want to project that from that particular support, 36 points to the upside, that gives me 179. From both perspectives, pattern, how it bounced for the moving average and how it is bouncing this last leg, this bullish leg, the pause in the bullish leg, I'm getting the same reading. I'm long Apple, and you should be the same. But the most important, last time we had the opportunity to squeeze all the way to 586%. And if everything is aligned the same way, and it is exactly as I did back on June 14, this time it's not going to be different. It's going to be the same. And you should be positioning yourself for another rally in Apple. And if you squeeze the options as I do with the SDFs, you probably are going to make in the next 30 to 45 days another 580% on Apple. I thank you for watching. Now remember, on the description, there's a couple links in this editorial that my team put together. There's a link so you can watch the broadcast. When I explain more in the video, I had the opportunity to interview with Dustin Allen Pass from Market Traders Daily, when I explained to him everything that I'm doing and how these can provide these blockbuster, call it grand slams, where you can take home as much as doubling your money or as high as, in the case of Apple, 586 potential opportunity. Thank you for watching, guys, and I'll see you soon.